Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, August 10th. Taking a quick look at futures. Oil is up 1.25%, but I'm going to call the rest of it flat. Not a lot going on here this morning. On the macro front, we've got NFIB Optimism Index. We've got production cost data point, and we got Charles Evans from the FOMC speaking this afternoon. Tomorrow's the big one, though. We've got CPI print on Wednesday morning, and that has the potential to, really move some markets. Or at the very least, we've got this narrative going out there that the Fed's going to have to start talking about tapering sooner rather than later. And so a real hot CPI number would probably further advance that type of narrative. But that's all chatter, obviously. So we're just going to have to go from level to level and see if we can figure it out as it goes along and react to what the market's actually doing versus what everybody's saying it's going to do. So we saw 10-year yields bump higher again yesterday. We started the day just below 1.3%, and then we finished up 1.317, call it 1.32%, so up a couple of basis points. Now, as far as the path, as long as it can hold 1.3%, the door's open to 1.4% up here at this next level. So I think a lot of how things are going to react is the speed at which that may or may not get there. If we wander for a long time, down in the low 1.3s and then grind our way up, that's one thing, versus, being there by the end of the week. That's a totally different thing. So I want to continue to watch that because I think it has a huge bearing on the sector rotation happening or not happening, and impact on tech, which we've been involved in quite a bit here in the last couple months. So with the rise in rates, TLT moves the opposite direction. So we've got two closes below the trend line here. So we've got a confirmed sell signal from that standpoint. And now the next important level is this 146, where we've got the 250 EMAs both converging right there at 146. So that should be pretty solid support. Now, if price just slices through that like it's not there, that'll obviously mean there's some horsepower behind that move. So we'll have to watch that as it comes down. But if you took the TLT short on Friday, no reason to get out of that trade. Just have your stop, right above this trend line, and then let's see if rates continue to rise. And if they do, that's going to continue to be a winning trade. So I really think at this point now, anything south of 149 should easily keep you in that trade. You could even say, what? There's a bigger layer here at 150 to shoot against. And so if you wanted to give it more room, you could easily do that. Now, I want to switch gears a little bit. I want to go over a couple of commodities with you. We had talked about Joe, which is the coffee ETN. We had talked about how fast this moved up and it came back. Now we've had a couple of weeks of consolidation down here around 50. I think it might pay some nice dividends for you to at least put this on your radar. Because one, it's a non-correlated asset. It doesn't have anything to do with Facebook or Apple or interest rates or anything like that. So from that respect, when it's nice to have a couple things like that in your portfolio for when the world ends, it'll be nice to see coffee green, if you know what I mean. So I like coffee. I like this setup. And as long as it can hold right in here at 50, I think a long is going to work. Set your stop right below, and you can drill down to the daily chart or even the 60-minute chart if you want to try to fine tune an entry if you're interested in that trade. But I think this is set up to go higher. And if you've been with me a while, cane was another commodity idea we had when this thing broke above 8, and it has spent a long time grinding its way higher. And that's one thing that a little bit of inexperience on my part on these products are getting the timing of the option right, and also the quantity you have to buy to make it be meaningful. You can see here we were playing for essentially $1. Now $1 on an $8 item is a lot. That's, what is that, 12%, something like that. So that's a good move. But you got to go out in time, and you've got to size it so it means something to you. So anyway, so I don't think there's anything to do with sugar right here, but I would put an alarm at, say, 9:25, and possibly even at like 8:50 in case it pulls back. And then you would have some lines that would, or some alarms that would pop up if this breaks out or has a pullback that you can buy. But go out in time, like for now, like October, November, January. I think you're just making a bet on commodity inflation. So anyhow, those are ideas for you. So let's dive into the indexes and the FATMAAN names. And I think yesterday, there's always stuff going on. For instance, yesterday there was Moderna, which a few of us captured at least part of the move yesterday. It was called out in our trading room. It was up something like $75. I didn't catch all of it, but I got a decent little piece of it. Certainly something that helped out yesterday, because yesterday nothing was working for me. Nothing. And to have that one work was nice. Facebook wasn't working. Microsoft didn't do anything. IWM was down. Semis were down. Literally everything I had yesterday was red. And being able to grab that Moderna and get something out of it was really, really nice. So, we're in summer, and I think with all this chatter about, the Fed's going to move sooner because of the hot jobs number and all that stuff, I think it's weighing on markets a little bit. There's just nobody out there. Somebody said Friday, this past Friday, was the slowest volume day ever. Now, I don't know if I believe ever, but like for 30 years, something like that. There's just nobody out there. So as far as this chart goes, nothing has changed. Use 442 as your pivot. If we drop down to the midpoint, that will be a yellow flag area. And then if we were to drop below, lose 440, chances are we'd come back to the bottom of the channel. And here it is on the 30-minute chart. We have broken out of the range, which, is good. That's bullish. We've had a couple of tests of it. We came back here and tested it, came up again. So this 441.50 here would be a nice line to shoot against on the long side. And as long as it can hold that, there's no particular worries. Same thing with the Qs. The FAANGs yesterday were pretty much dead. Google had a nice little day working. but I wasn't focused on that one. You can see here there's a lot of intra-bar volatility, down, back up, but, essentially going nowhere. So looking at the 30-minute chart, I think you can use this 368.50 as your pivot, and as long as that holds, I think you can be long. If it drops down below, you could come back into this 367.50, 367 area and look for a bounce there. IWM remained choppy yesterday. We had this big opening candle, and then they that was Friday. Yesterday was just a whole bunch of nothing. I mean, it's cutting back and forth across this 50 like it wasn't there. I would have thought with the increase in rates yesterday, I thought that would have helped IWM a lot more than it did. So I've been, battling this, and not just feels like I'm in quicksand. If it doesn't do something today, I'm just gonna step aside and kind of do what I told you guys to do. Wait for this breakout of 224. Then I think it would, really have some horsepower behind it. But otherwise, could be setting up for more frustration here between this 224 and 218 range. Now, if it came back to 218, like it did here, that would be a place to buy as well, with a stop just below. And you'd be just looking for a move back up to 224, which would be, a very nice trade in and of itself. And here's the 30-minute on it. You can just see it just didn't do anything. I mean, like $1, 50 cents in either direction, essentially. $1 range is not very much, and that makes for some tough trading. Facebook. I mean, there's not a lot to say on these charts. I mean, they didn't even move. I was disappointed it didn't hold 362, which was the bottom of the gap, but I'm not going to make a big deal about that. I mean, it can pop that in 5 seconds this morning if it wants to, but this has to get going to fill this gap. So anyhow, but technically, as long as it's below 362, it could fall back in here to 358, which would be a big disappointment, but not outside the realm of possibilities. Apple did nothing, no changes to the chart. I think it needs 146.50 to the upside to break out, and a move down below 145.50 would open up the door for a bigger move down to 144. But really nothing happening on Apple yesterday at all. Tesla showed some signs of life, came back up here, made yet another run to 720 and got rejected, and put in this gap here. So we've got this gap and this gap that have yet to be filled, and we've got the big overhead gap that is at least about $15 wide. So again, I would key off of 720. I think here, given so many rejections at that level, I think you got to have price prove it. And if it can get up into 720 and hold it, then I think there's a good chance of some upside power to fill that gap after this consolidation. Microsoft, disappointing day. Actually opened way up here at 291.50, but it didn't stay there long. They hit that thing hard right on the opening candle and essentially faded it all day. Now, if you wanted to get involved in Microsoft, this 288 has held for 4 days from right here to right here. There have been responsive buyers at 288. So if you wanted to start a position there, it would make technical sense to do so with a stop just below. And of course, what you're hoping for is a move back up to 290 and then a breakout. But yeah, this 288 has been pretty decent support. Amazon, nothing. I mean, just going sideways the whole day. I think you got to have 3375 alarmed, and you got to have 3300 alarmed. The only thing winning in here is time decay. So I think you got to wait for a move either higher or lower, get an objective entry. Google had a nice close. Did nothing in the morning and then got a lift in the afternoon of what was it, up $23, which, I mean, compared to the other ones was a nice move. So now if you're in the trade, just stay in it and see if you can get to 2760 and get a breakout. If you're not in the trade, I think you got to either wait for the breakout or a pull back into 2715 to give yourself an objective level to shoot against. Netflix, nothing at all. Continue to key off of 522.50. If you get a break above, I think you can get long and look for a $10 move. But down here in the middle, I don't think that's a very objective trade location. Semis, nothing. No change to the chart. Continue to key off of this 267.75, 268 area. As long as it holds that, it's fine. But if it loses that, it's subject to backsliding in here to 265. So I would be careful there. I'm still long. So for me, I got to have this hold today, or I'm going to probably get out. If it shows further weakness and pulls back, I'll probably just get out and then, reset when the pullback looks to have ended. AMD had one brief moment of bullishness, and it reached up to this downtrend line and overhead resistance at 112, and then they faded it the rest of the day. So the downside support levels that I have are at 106.84 and then 105. If it loses 105, it's probably coming right into 102. So I wouldn't be too anxious to get along here. What I think I really need to see is have it stop going down at one of our predefined levels and then break out of the downtrend line on the hourly chart, and that would be a good opportunity to try along to move at least back up to 112 after it bases here and breaks out. I think you could get a move back up to 112. So before we get into these trade setups, if you're new here, I appreciate you spending some time with me. Hit the subscribe button and the alarm bell. And also jump over in the show notes. There's a link to the blog site where you can drop in your email and register for all my content. That way you'll get a nice, neat email morning, noon, and night. Whenever I send anything out, you'll get right in your email box. And you'll also get an invite to our trading room. And I got to tell you, I've been so pleased with the number of people that are finding their way to the trading room. We've had a couple of great additions last week and this week. A lot of fresh ideas, fresh perspectives, different trading styles. So I think it's added a lot of vibrancy to the room. And if that sounds interesting to you, I certainly suggest that you take advantage of it. I think you'll get a lot of, at the very least, idea generation. So, and longtime listeners, thank you so much for passing my link along to your social circles. I appreciate your support. Let's keep it going. So I've got some trade setups for you, just places to set some alarms for future potential trades. One is on JETS, which is the airline ETF. I'd like you to set an alarm at 24. Why? Because, well, one, there's a price void just above. Two, that's going to be a confluence of the 50 and the 200 EMA. So if it were to come back up and break above 24, it would be recapturing technical resistance and recapturing the EMAs. But I think more importantly, if we saw that move in JETS, we can go down, use this as a trigger to drill down on the airlines and then find one or two that may be setting up more aggressively or better than the others. And so we can use this as a trigger to look towards the airlines for a compelling setup. Or for those of you that don't want to hassle with all that, you can just get long the basket, and then we can look for a move up to 25.50 and back up to the prior highs at 29. So I think that would be a nice setup in and of itself, because this has had a long correction from March all through the summer so far. This has been correcting this strong move off of last year. So I wouldn't be surprised if a turnaround might be heading our way sometime soon. Pinterest, big gap down the other day on earnings, setting up this bracket trade. What I'd like you to do is set an alarm at 61, and then set an alarm at 55.75. So we got 61 and 55.75. If it breaks below, literally, there's nobody home. I think that would be a good short. If it, oscillates in here for a while and then breaks higher into the gap, we've got a $10 gap to fill. So that would be a nice risk-reward trade to get that gap fill. By the similar token, this is Snap. This is a 60-minute chart. I'd like you to alarm 79 and 72. We've got a trading range that has developed between 79 and 72, so that's $7. If we get a breakout above 79, that points to 86. If we get a breakdown or we get a rejection here, we can do one of two things. We can get short against 79 and look for a move back down to the bottom of the box, or if you prefer, just wait for 72 to be violated on the downside and then get short for a $9 gap fill here. So I think Snap sets up either way. I think the breakout would be just as compelling a trade as the breakdown. It's basically the same amount of, we're looking for almost the same amount on either side, $7 and $9. So I think that'd be a good trade. UPS was a bracket trade we set up last week on earnings, and you can see that the bracket is doing kind of what it's supposed to do. It's containing price and building up some energy, and this thing is going to resolve one way or another. It just has to. So I would be alarming this 198.07, and I would just go ahead and alarm the gap here at say 190 or 189, however fine you want to make it. And then you've got a decent move higher and lower out of that box. And it's, either one of them are going to be gaps. So I think that's a strong setup. Now, I haven't checked in on these other ones that we flagged, but you're certainly welcome to go back. And I believe several of these are still in the bracket range as valid trades. So I think those are worth a look. And so, right now, just to wrap this up, we're in the doldrums of summer. We've got low liquidity. That can result in frustration, boredom, however you want to describe it. I think the thing to guard against now is, trading for the sake of trading. When you don't have anything happening or anything to occupy your time, or everything you've got is just doing nothing, resist that temptation to just trade for the sake of trading. There's a time to press and a time to lay back and wait. And so if nothing's happening, you may just want to close some positions and raise some cash and wait for a better opportunity. Or if you're content with what you have, do some chart work, do something else, do a load of laundry, do something in the house to help out, keep yourself occupied. Just don't overtrade, or you'll end up, kind of digging yourself a hole. So let's see how this plays out. Like I said, tomorrow there's a big catalyst with that CPI print, so be aware of that. So let's wrap it up here. Thank you so much for your time. I hope you have a good day of trading. Hope we get some movement today, but time will tell. So let's keep it rolling. This has been Chris Butts with Traders Profit Compass. Talk to you next time.